and he who has the gold and the commodities makes the rules, and all of the metal is heading eastward. So whether we beat them to the punch and kind of steal their thunder, which wouldn't surprise me, or they do it by this time next year, wouldn't surprise me one iota if we saw gold revalued to a level that would shock people.
You're watching Silver News Daily. Subscribe for more.
Silver is on the brink of a historic surge, and you won't believe what's about to happen next. Andy Schechtman, a leading expert in precious metals, is sounding the alarm silver prices could soon reach unprecedented levels. And here's the thing, it's not just speculation. From falling U.S. Treasury yields to global central bank rate cuts, all the signs are pointing to a massive rally. In today's video, we break down exactly why silver could be the best investment opportunity of the year. So stick around, because this information could change your financial future.
I've never understood this to the degree that I did yesterday. Fortunately, in the 3 years that I've been here, Dunnigan, the hurricanes have all gone over to the West Coast, much like this one. But from the West Coast, they would go, northeast in direction and miss us. Going to the Publix groceries, first of all, we drove by Costco, and I mean, you would think Armageddon was coming. There was a line, cars lined a half a mile down the street. So obviously we didn't go there. And then just going to the local grocery store. And in Florida, Publix is on every corner. And literally, it seems like. And there were no eggs. There was no milk. The meat was almost totally gone. The water was gone. It's really startling when you realize, the old saying, just in time economy, where the supply chain is ordered just in time, and a disruption in that supply chain. What does it mean? You can see it in real time in the face of a hurricane that's not even supposed to really affect where I am materially. Granted, who knows? Mother Nature could decide to take a right turn. But anyways, the point of it is that I think you can discern a lot from this, whether we're talking about precious metals or preparing. We often talk about the reluctance to prepare, hence the old name of your show, Reluctant Preppers. And I think that when you are reluctant and when you are doing things in a reactive fashion rather than a proactive fashion, fortunately, most of my preparation has always been done proactively. But just to run to the grocery store saying, geez, we may have to hunker down for a while. Fortunately, we have a generator in hurricane windows. Maybe this could be a 3, 4, 5 day deal. So we go to the grocery store, and I was shocked and blown away by what I saw. And I think people should think about that as it pertains to precious metals, which, again, when we've been told on many levels by guys like Jamie Dimon that a hurricane was coming. Well, here's one that is coming literally, and I think he meant more figuratively. And when you see some form of a monetary hurricane come rushing through the economy, being reactive is certainly not a good path to follow. And I can tell you that in real time, just watching the grocery stores empty out in a very, very, very short period.
Right now, the silver market is holding steady at around $31.64 per ounce. But what's fascinating is the reason behind this stability. U.S. Treasury yields have been falling, and major central banks are signaling rate cuts. In fact, there's a 94.1% chance that the Federal Reserve will cut rates by 25 basis points in November. And why does this matter for silver? Well, when the interest rates drop, non-yielding assets like silver become much more appealing to investors looking for stability and growth. It's all part of a bigger trend that's setting up silver for a potential breakout. But the question is, are you ready to capitalize on it?
Yeah, I mean, it's true. And I mean, there are signs all over the place. The Fed drops short-term interest rates down, but at the same time, we see the back end of the curve start to go up. And that to me is the market, or big money selling long-dated claims for the future delivery of dollars, which increases interest rates for the bonds. And this is not a good omen. This is at the same time we see them buying gold and silver at a rate the world has never seen before. And I think that for a long time, we had, it seemed, this geopolitical cooperation, in particular in the price of oil and the price of gold, with the Saudis and with other countries. And it seems as though the markets are no longer discounting this geopolitical cooperation, at least in my mind, in terms of the price of oil and in terms of gold. And they are starting to separate themselves. We can look at a country like, for example, in this case, a country like Poland, who has now decided to continue to purchase gold. They're already at 420 metric tons. They have more gold now than the EU. And when you talk about what Adam Lipinski, the head of the central bank, said, is that he wants to get it up to as high as 20% of their foreign exchange reserves. And I want to remind people what Adam Lipinski said when asked recently, why is it that you buy gold? And he says, because gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on
Let's break down the major factors that are driving silver's potential surge, according to Andy Shechtman. The first and perhaps most significant is the weakening U.S. dollar. As the Federal Reserve leans toward cutting interest rates, there's a 94.1% chance they'll reduce by 25 basis points in November. Investors are looking for alternatives to safeguard their wealth. Lower interest rates reduce the appeal of traditional yield-bearing assets like bonds, making precious metals such as silver far more attractive. This creates a flood of demand for silver, which we're already seeing reflected in the market. But there's more. Geopolitical tensions are also playing a critical role. Central banks worldwide are reacting to uncertainties like escalating conflicts in the Middle East. For instance, Israel's airstrikes on Lebanon have wrapped up safe haven buying. Shechtman points out that when geopolitical turmoil increases, investors flock to precious metals as a form of protection against global instability. Silver, being more affordable than gold, often benefits disproportionately during these times. Additionally, Shechtman highlights central bank behavior as a crucial factor. Countries like Russia and China are not only stockpiling gold, but also aggressively acquiring silver. Russia, for the first time, has included silver in its federal budget. This shift is unprecedented and suggests that central banks are preparing for a broader financial reorientation, moving away from the U.S. dollar and towards tangible assets like precious metals. Finally, let's not forget about the influence of industrial demand. Silver is a vital component in industries ranging from electronics to renewable energy, and as these sectors expand, they drive up the demand for physical silver. The London Bullion Market Association recently conducted a poll among its delegates, forecasting a 40% increase in silver prices over the next year, with targets reaching $4 to $5 per ounce. Shechtman argues that these industrial needs, combined with increasing investment demand, are creating a supply squeeze that could catapult prices even higher. So, with all these elements coming together, rate cuts, geopolitical unrest, strategic moves by central banks, and booming industrial demand, it's clear why Shechtman believes that silver is primed for an unprecedented rally. But the big question remains, will you be ready to seize the opportunity when it comes?
Electronic accounting records. Now, of course, we don't assume that this will happen, but as the saying goes, forewarned is forearmed. When you hear things like this, it becomes very, very important. We're seeing the breakout of gold in Swiss francs, which is a very important confirmation because especially in terms of other currencies where we've seen gold break out in most currencies, but the Swiss franc has been one of the world's top performing currencies this year and in years past. And a breakout in Swiss francs above moving averages is even more, monumentous. And it is, and it's happening. We're seeing countries like Iran who have increased their gold ownership and purchasing by 6 times this year compared to the same time last year. And there was an interesting article that came out about a hacking group that exposed documents from a company called Tandar Sara. I know I butchered the hell out of that name, but anyways, this company is involved in drone technology, and it's linked to Iran, to their military. And the hacked documents that came out, kind of like a WikiLeaks thing, said that Iran paid $1.75 billion in a deal for drones, and the payment was made with several tons of gold ingots. We're seeing a shift away. We're seeing a movement away from the West, a shift away from treasuries, a shift away from dollars, and a changing of the guard. And, countries are tired of sanctions and the bullying, and they're trying to get out of the way of the West. And they're doing that by purchasing over $1 trillion of gold since 2022 while selling $1 trillion in treasuries. This is a trend that is unmistakable. When we talk about the countries in Project Enbridge, the ones that are moving to what I believe.
Now, let's dive into the technical side of things and why the data is aligning perfectly with Andy Schectman's bullish outlook. Currently, silver is trading at around $31.64 per ounce, but there's a key support level to watch, $31.41. On the charts, this level is more than just a number. It's a critical pivot point that has been holding firm. Analysts are seeing an upward trend line forming near this support level, suggesting that if silver can maintain this momentum above $31.41, it could pave the way for a significant bounce. Schectman and other experts argue that if silver breaks through the immediate resistance at $31.92, we could see prices shooting up to $32.35 and even $32.70 in the short term. This isn't just speculation. Technical indicators like the 50-day and 200-day EMA, exponential moving averages, are showing strong support at $31.46 and $31.21 respectively, further reinforcing this bullish trend. What makes this especially interesting is that the market is also keeping an eye on upcoming U.S. economic reports, like retail sales and weekly jobless claims. Positive or negative outcomes could influence silver's trajectory, adding volatility that might push it past these resistance levels. Schectman believes that these economic updates are key triggers that could drive a breakout. If the market reacts to lower yields or dovish central bank signals, silver could very well surpass these technical thresholds and enter a new price range. But the big takeaway here is that the technical setup aligns perfectly with the fundamental factors we've discussed. From falling bond yields to central bank activity, everything is converging at this pivotal point. For those watching closely, these indicators might just be the confirmation needed to act before silver prices move higher.
Is really the big moment, and that is if indeed we see a common settlement currency come out of this meeting in October or in a few weeks here in Russia. It's noteworthy to note that all of the countries in Enbridge, China, Hong Kong, Thailand, UAE, they all run a current budget surplus, and all of them have been increasing their gold reserves. And instead of buying treasuries, this is what's called gold recycling, and they're storing their trade surpluses in gold instead of U.S. treasuries. This is huge. All of these things are going to factor in to this big moment. And it's also noteworthy to note that China, Hong Kong, and the UAE all have sophisticated precious metals markets. The one in Shanghai, the volume has now surpassed the COMEX dramatically with a 400% increase in volume over the past 6 months or less. It's now the second most actively traded market in the world. You can see the pieces are being put into place. It's not just gold. We find out that Russia's federal budget draft includes plans to acquire not just gold, platinum, and palladium, but for the first time ever announced by a central bank, silver. And it's the first time that the central bank has ever made a significant announcement in this regards. And, could it push it above 50? Yeah, why not? When you have stupidity to the degree that we have, suppression on the COMEX market, on the LBMA, yeah, it's rocket fuel. And maybe that's why we see the Citibank analyst, Max Layton, come out and say that, well, first of all, silver's up about 35% so far this year, but they're predicting over the next 3 months a rise up to $38 and maybe even higher. So all of these things are beginning to factor into into
One of the most overlooked yet critical factors supporting Andy Schectman's prediction is the growing industrial demand for silver. Silver isn't just a precious metal. It's also an essential component in many high-tech industries, especially renewable energy. From solar panels to electric vehicles, silver is a key material, and its usage is only expected to increase as these technologies expand. As governments and corporations push for greener energy solutions, the demand for silver is intensifying, leading to a tighter supply in the market. But it's not just about the demand. The supply side is facing challenges too. Mining output has struggled to keep pace with this rising demand. The London Bullion Market Association, LBMA, recently highlighted that silver prices have surged nearly 40% over the past year, and they project an additional 40% increase to $4.05 per ounce in the coming year. The reason? Industrial needs are outstripping what mines can produce, creating a growing market deficit. Schectman points out that this supply constraint is exacerbated by geopolitical factors. As nations like China continue to accumulate silver, not only for industrial use but also as a strategic reserve, the availability of silver products on the global market diminishes. For example, Australian silver kangaroo coins are now selling at premiums above the spot price, reflecting both strong investor demand and limited supply. This scarcity is a warning signal. If silver supply remains constrained while demand continues to climb, prices could skyrocket. These market dynamics are setting the stage for a potential supply crisis. As silver becomes harder to obtain, investors and industries alike may start scrambling to secure their shares, driving prices even higher. Schectman emphasizes that this industrial squeeze could be a key catalyst for silver to break through to new highs. So, as the market tightens, are you prepared to take advantage of this opportunity before silver becomes even harder to acquire?
to the global picture. And that discounts all the stupidity that we are seeing at home, where $167 million was just given to Lebanon, approved in aid, $385 million already this year. And yet we need to get congressional approval to approve additional aid to North Carolina at the same time. And they've gotten a fraction of that amount. It's unbelievable where this moron, the head of Homeland Security, what is it, Mayorkas, came out just on Wednesday, I think, and he said that they don't have enough funds in FEMA, that they've already spent more than $1.4 billion since the fall of 2022 to address the migrant crisis, and they expect another hurricane hitting a la tomorrow, but they don't have enough money to do it. And it's disgusting that we've given $1.4 million to illegal immigrants here, money taken from FEMA, and at the same time in an environment, and this is kind of just, I digress for a second, where it just seems that with this modern monetary theory BS that's all over the place, where we can spend money to a degree that no one's ever seen before. We can create a 100,000 in debt every second and $1 trillion every 100 days, which took 200 years to do the first time, that we don't even have enough decency and even a hollow gesture to stuff the coffers of organizations like FEMA so they can come in and help us when we need it most. It's just unbelievable that we give money all around the world and don't take care of our own. It's horrific.
Geopolitical and global economic shifts are playing an increasingly pivotal role in silver's potential surge. As Andy Schectman emphasizes, the movement of precious metals, particularly silver and gold, is shifting dramatically from west to east. Countries like China, Russia, and other nations in Asia and the Middle East are not just accumulating these metals. They are strategically stockpiling them as part of a broader financial realignment away from the US dollar. This is crucial because it suggests a growing mistrust in dollar-based assets, pushing these countries to secure tangible assets like silver and gold instead. Shechtman highlights how Russia, for example, has made a groundbreaking move by including silver in its federal budget plans. This is a rare and significant development as central banks typically focus on gold rather than silver. By diversifying into silver, Russia signals a shift in its financial strategy, reflecting an increasing emphasis on physical reserves. The move underscores a broader global trend where central banks are hedging against economic and geopolitical uncertainties by holding more precious metals. Additionally, the Middle East remains a hotspot for geopolitical tensions. Recent escalations, like Israel's intensified airstrikes on Lebanon, have heightened the demand for safe haven assets. Silver, being a more accessible alternative to gold, is benefiting from this surge in demand as investors and governments alike seek to protect their wealth amidst global turmoil. What's also noteworthy is the ongoing trend of de-dollarization, where countries are moving away from the US dollar in trade and reserves. This has led to a rapid accumulation of silver reserves as a way to build alternative financial systems independent of Western influence. Shechtman points out that this shift could trigger a global scramble for silver, particularly if countries in Asia and the Middle East continue to stockpile aggressively. As these geopolitical and economic dynamics evolve, they create a perfect environment for silver prices to spike. The question remains, with this massive eastward shift of metals and the growing geopolitical risks, are investors in the West prepared to act before a silver supply becomes even scarcer?
And you have the reporting agencies. Remember we talked about Claudia Sahm, the Sahm rule, which is I think 9 recessions in a row perfect record, where if employment rate drops, I think 50 basis points below its 3-month moving average, you're in a recession. And the unemployment rate would have had to have fallen to 4.5% for that to be triggered, as it should be. In September, we get this, again, with the BLS. I mean, we should just take the L right out of this and call it what it is. It's BS. They tell us after, revising 1 million jobs in last year, now they tell us that in September that they added a whopping 254,000 jobs, the biggest monthly increase since March, higher than average monthly gain, blah, 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 blah. But what they didn't tell us is that they actually increased the number of government workers by 785,000 government workers, the highest monthly surge in government workers on record. Right before an election, complete and total BS out of the BLS. In reality, the U.S. job market shed 458,000 jobs in September. They're called non-seasonally adjusted jobs. Okay, so those would be the kids who went back to college that were, doing landscape work and part-time work and whatever. We lost 460,000 jobs. We added 785,000 government jobs. And to your point, government doesn't produce anything. They just suck assets out of the system, suck profitability. They don't have the profit motive that we find in business, where you do things for a profit motive. There is no profit motive with government. Therefore, it's completely and totally inefficient. And that's exactly what we are seeing here, just this crap and people will believe it, because most of the people who think that the economy is strong didn't even see that they quietly revised jobs down at the end of the year for 2023. It's disgusting. We spent $66 billion on illegal immigrants in 2023 versus $4 billion for homeless veterans. When you talk about, priorities being misplaced, and it's crazy. So, I think that there are a lot of things going on right now that people should be alarmed about. How about this one from the too stupid to be stupid category? Former Dutch Prime Minister Mark Rutte visited the Ukraine last week, Thursday, just 2 days after replacing the gal who was running the head of NATO, and now Rutte is now the head of NATO. And he says, Ukraine is closer to NATO than ever before, and we will continue on its path until you become a member of our alliance, he said. I mean, when you talk about stupid, are they trying to drag us into World War III? Are they trying to provoke Putin? A promise that Ukraine would never be in NATO, and now you have NATO not only providing assistance, providing weapons, but now they're going as far as saying you're going to be dragged into NATO. This is crazy. So yeah, I think it's time that people start to think unconventionally.
Now, with all these elements converging, falling bond yields, aggressive central bank policies, surging industrial demand, and escalating geopolitical tensions, Andy Schectman's prediction for a massive silver surge seems not just possible, but increasingly likely. The technical indicators are in place, the economic fundamentals are aligning, and the global geopolitical landscape is pushing demand for precious metals to new heights. Silver, often considered the more accessible alternative to gold, is positioned to benefit immensely from these dynamics. As we've explored, central banks worldwide are making unprecedented moves to accumulate silver, and industrial demands are skyrocketing, tightening the supply chains. The eastward shift of precious metals is reshaping the global financial order, and silver is emerging as a critical component of this transformation. With Western investors slow to react, the question becomes, will you seize the opportunity before the rest of the market wakes up to this new reality? If Schectman's insights hold true, silver's price could break all-time highs, potentially reaching $4 to $5 or beyond. As the LBMA delegates predict, for those prepared, this could be one of the most significant financial opportunities of the decade. But remember, investing always carries risk, and while the potential upside is enormous, market volatility is a constant factor. As Schectman himself notes, investors must be both financially and emotionally prepared for the market swings that come with silver. So as you consider your next move, make sure you are informed, prepared, and ready to act. And if you haven't already, subscribe to our channel for more insights and expert analysis. This could be the moment that shapes your financial future. But as always, this is not financial advice. Make your investment decisions wisely.